We constantly hear that to be safe in the future, we have to lock away our money today. The problem is, while you are saving for retirement decades from now, you still have a life to live right now. By the end of this video, you are going to have a precise mathematical roadmap. We will build a system that fully funds every major milestone you want to hit, while still leaving you cash to enjoy your current lifestyle. To start, click the link below to download the Financial Roadmap spreadsheet and grab a rough estimate of your current monthly income. We are going to use a standard baseline called the 50-30-20 rule. 50% covers your basic needs, 30% covers your current wants, and 20% for long-term investments. In this tutorial, we are strictly focusing on weaponizing that final 20%. Once you build a highly efficient, automated engine for that 20% slice, the constant anxiety about your financial future disappears. You know the big goals are covered, which gives you the freedom to spend the other 80% exactly how you want, completely guilt-free. Let's open up the roadmap and establish your baseline. Look at the highlighted cells at the top of the sheet. First, input your current age. Next, type in your monthly investment. For this example, we'll assume a 50,000 rupee salary, making our 20% slice exactly 10,000 rupees a month. Finally, we'll set our baseline inflation rate at 5%. Now, look at the next cell down, the step-up rate. As your career progresses, your salary will grow. We will set the step-up rate to 10%, assuming you will increase your monthly investment amount by that same 10% every year. Here is how step-up works. Start investing 10,000 rupees a month. Next year, bump it to 11,000. Year 3, 12,100, and so on. Maintained over decades, the deployed capital grows exponentially. You eventually invest huge sums completely effortlessly. This step-up mechanism solves the problem of feeling like you don't have enough money to start. You don't need a massive initial deposit. You just need to let time multiply your incremental raises. Next, we map out your specific life milestones. Look at the rows on the left. Say, a wedding in 2030, a car in 2035, a house down payment in 2040, an education fund in 2050, and retirement in 2055. Then, in the green column, enter what each of those would cost if you bought them today. Things get more expensive over time. The spreadsheet automatically takes your current day estimates and calculates their actual future cost, applying that 5% inflation rate we set earlier. The impact is immediate. A wedding costing 10 lakhs today will require 15 lakhs by 2030. Further down the timeline, the effect is larger. An education fund feeling like 25 lakhs today will actually need about 1 crore by 2050. Calculating this hidden tax up front is the only way to ensure you actually hit your targets. If you aim for today's prices, you will fall drastically short when the bills arrive. Now look at the split percentage column. This is where you decide how much of your monthly 10,000 rupees goes toward each goal. The blue column on the right will auto-calculate how much money you'll have at the deadline based on your split. We start by heavily weighting the nearest deadline. If you put 65% of your monthly allocation toward the 2030 wedding, the blue cell updates to match your 15 lakh target. You assign the remaining 35% to your later goals. This sets up what we call a relay race strategy. You don't have to fund everything equally forever. You fund the nearest goal, finish it, and recycle the capital. In 2030, you pay for the wedding. The goal completes, instantly freeing up that massive 65% chunk. You then redirect that 65% into long-term buckets, like your house and retirement, rapidly accelerating how fast they fill up. By dynamically reallocating your money as each milestone drops off, your savings rate builds compounding momentum. You are funding multiple, massive expenses throughout your life, using the exact same pool of monthly cash. To make this math hold up in the real world, you need specific rates of return. The spreadsheet calculates that you need around an 8% return for the near-term goals, scaling up to about 14% for the decades-long targets. To achieve those precise returns, we use automated portfolios like Small Case Horizon. These are structured specifically around the year you need the money. Look at this chart for the Horizon 2030 portfolio. Because you need this money soon, it uses a highly protective mix of 52% fixed income and cash with only 25% in equities. This prevents a sudden stock market dip from wiping out your wedding budget right before the date. Contrast that with the Horizon 2055 portfolio, designed for your retirement. Since you have 30 years to ride out market waves, this mix is aggressive.
leaning heavily into a 42. Click the small case links below and set up your automatic monthly investments to match the exact percentages you just calculated. You don't eliminate financial anxiety by suddenly making millions overnight. You eliminate it by building an airtight mathematical system today and letting time do the rest of the work.